So let's go ahead and get started. First of all, for those of you that don't know me, my name is Shay Mora, and I am the Vice President of Lending here at FranFund. I'm going to be your speaker today, giving you all of the information you need to know about PPP loans as well as the SBA debt payments and some 7A incentives that were just passed as well. So I hope you all had a great weekend. There's a lot to cover. So I will be going through the presentation first, and then I will be taking some Q&A at the very end. So if you have any questions along the way, just type it into the Q&A box, and I will try to answer as many as I can whenever the presentation is over. I am recording this, so that way we will have it available on our website and can send it out. If you missed anything or you wanted to hear it again or have some friends or family that also needed to hear it that you want to share it with. And so we have a lot to cover, so I'm going to go ahead and get started. So first of all, we always just want to have a little disclaimer out there. As a lot of you probably experienced in the past with the PPP rounds, there's a lot of things that are subject to change as SBA comes out with its guidance. So the information that we have in this presentation today is based on our interpretation and understanding from the review of the Economic Aid Act and the SBA guidelines that have been released so far, as well as our trusted resources. But we will continue to update our website and send out important email notifications anytime something does change that we feel like is really important that our clients need to know about. So we will continue to update our website. I'll have the link for that in here in just a little bit. So an overview of what we're talking about, the updates to the new PPP, appropriated funds that were just passed, updates to the Economic Injury Disaster Loan, also known as the EIDL, and that $10,000 grant you can get along with it. The SBA Debt Relief Program, which is where the SBA was covering some SBA payments for you. And then the new 7A incentives that were just passed in the Act as well, which there's some great benefits to borrowers and lenders in there. So first, our favorite topic, the Paycheck Protection Program. So in the new Economic Aid Act, they just approved $284 billion. The deadline to apply is the end of March or until funds are exhausted. So if you haven't already registered or started applying for a PPP loan if you need one, I definitely recommend you get started on that right away. First draw, so there's two different types of PPP loans in this round. There's first draw and second draw. So first draw is basically referring to a borrower that has not received a PPP loan in the past, or maybe you did, but you need an increase or you want to reapply, and I'll get more into that in just a little bit. And then a second draw loan are smaller loans. They did decrease the max a little bit, but newly available to borrowers that have had a PPP loan in the past, and you have already spent it, or you will have spent that first PPP loan prior to your second one being dispersed. And I'll get more into that as well in just a little bit. So some dates to know, some of these have already passed, but last Monday they started accepting PPP applications from community banks and for first draw PPP borrowers. Second draw PPP borrowers with community banks could start applying on the 13th. Today, any lender can start submitting PPP applications. And then on the 25th, if you are a first draw borrower, but you are looking to get a loan increase approved or reapplication, you can start applying for that, or at least lenders can start submitting your application for that on the 25th. But again, I would go ahead and get registered and started now so that you're all teed up and ready to go when that date hits. So some general terms, and these apply to any PPP loan right now. So the interest rate is 1%. It's not adjustable. It's going to stay the same throughout the life of the loan. 5-year term. The same rules, most of them still apply from the older CARES Act with the new ones that are coming out. So if you do have a franchise, those same affiliation rules are waived. So for example, the employee maximum number is based on per location, not taking into consideration your affiliates. There's no personal guarantees, no collateral is taken. Um, if you have a ton of liquidity, let's say you're not having to pass a credit elsewhere test like you normally would for an SBA loan. There's no fees, no prepayment penalties. Um, and they did make sure to provide some clarification on the fact that you cannot put a halt on your loan funding. In fact, the lender has to make a full-time disbursement of the PPP loan within 10 calendar days of you being approved. So just be aware you can't take multiple disbursements or delay the funding. It has to happen within that time period. Loan forgiveness. So this is the same for first and second draw loans. They are again forgivable up to the full amount plus any accrued interest, as long as you abide by the guidelines. The covered period has changed a little bit, so they are now allowing borrowers to choose a period ending at a date of the borrower's choosing between 8 and 24 weeks after the loan has funded. Loan payments will be deferred if you apply for loan forgiveness within 10 months of the end of that covered period. And again, interest will accrue, but it is forgivable. If you don't submit the forgiveness application within that time frame, so the covered period plus 10 months, you'll be required to start making payments on or after the last date of the covered period you chose. Forgiven expenses paid using the PPP loan will be deductible for tax purposes, so you're not going to get hit with some income taxes and that kind of thing with this loan. So, in addition to the original expenses that were forgivable with past PPP rounds, those still apply here. So you have payroll, utilities, rent, and then mortgage interest. They've also added some additional expenses that you can include in your forgiveness application. So these are expenditures associated with operations. So if you have any software, cloud computing, or other HR and accounting expenses, you can now group those into your forgiven expenses. Property damage costs. So any damage costs that you had during any of the public disturbances that occurred during 2020 that were not covered by your insurance, you can now include those. Covered supplier costs, so purchase orders, order for goods in effect prior to taking out the PPP loan that was essential to your operations, such as perishable goods, can be made on or during the life of the loan. Worker protection expenses, so investments in any type of equipment or regulatory items that you needed in order to stay compliant with whatever COVID guidelines and restrictions are in your state. Employer provided group insurance payments. So this is something that's new in your payroll cost as well, and I'll go over that in a little bit. But you can now include group insurance payments in your payroll cost calculation. So basically anything related to the continuation of group healthcare, life, disability, vision, and dental benefits. And then you can include the refinancing of a funded SBA EIDL loan. So it has to have been made between January 31st and April 3rd of 2020. And they made a big clarification here, which is really great news. You do not have to back out the up to $10,000 advance. If you did receive that, you don't have to back that out of your PPP loan forgiveness like you did in previous rounds. They are actually anyone that had an EIDL and a PPP loan and did that, they will be going back and giving you forgiveness for that. So just be aware that it covers you too if you were already a first draw borrower in the past. And then any PPP loans made before, on, or after this new act that we're going over today, you can use these expanded expenses as well in your loan forgiveness, unless your loan has already been forgiven. So if your loan was less than $150,000, there will be a simplified one-page app for loan forgiveness. So that's pretty nice. Your loan will qualify for full loan forgiveness if during that 8 to 24 week covered period. Following disbursement, your employee and compensation levels remain the same. There are still those existing safe harbors. So if you did hire back some full-time employees, or you fix the salary and wages to be back up to what they were, then your loan can still be forgiven for those costs. Your loan proceeds have to be spent on the eligible expenses, including, of course, your payroll cost. And a change that they've made this time is that at least 60% of the loan proceeds that are spent, or you have to spend at least 60% of your loan proceeds on payroll cost. Your idle refinance can actually be included in that. And then just like the original loans, your amount of forgiveness can be reduced if you reduce your number of employees or you reduce your salaries by more than 25%. But again, there's those safe harbors in place so that if you do bring those back up, you're still okay. So they expanded the employer retention tax credit. I don't want to get too in the weeds in this because I definitely recommend consulting your accountant if you have any specific questions to you. But what it does, the new act, it significantly expands this tax credit beginning on January 1st this year through June 30th. The prior credit was 50% on $10,000 in qualified wages for the whole year, or a max of $5,000 per employee. This new credit is now 70% on $10,000 in wages per quarter, with a max of $14,000 per employee. It expands to include employers who experienced a decline greater than 20% in comparable quarterly gross receipts compared to only 50% in the past. And employees with 500 or fewer employees can claim the credit for wages to paid employees irrespective of whether the employee is actually providing services. You can receive both this tax credit and a PPP loan. They just both can't cover payroll expenses. So it is a refundable tax credit, and again, highly recommend consulting your accountant specifically if you have any questions. Here is a link that will take you to the IRS website where they actually go over this tax credit in more detail. It wasn't updated the last time I checked, but they should be doing that any day now. So who can apply for a first draw PPP loan? Pretty much the same rules apply as they did in the past with the CARES Act. You have to have been in operation on or before February 15th of last year. You have to have employees for which you pay salaries or payroll taxes. You must have 500 or fewer employees per physical location. So even if you have multiple locations under one business entity, that's okay. Just go by location, not by entity. Your business can't have been permanently closed or currently in a bankruptcy proceeding, and you're only allowed one first draw loan per eligible entity. So if you're a first-time PPP borrower, you can only have one loan per eligible entity. The loan size allowed for first draw borrowers is the lesser of $10 million or 2.5 times your average total monthly payroll cost. The covered period for your payroll you can choose between 2019 or 2020, and technically it also includes the 1-year period before the date the loan is made, assuming you're going to do that pretty quickly. 2020 is probably an easy calc, or 2019 to choose from. Businesses that are part of a single corporate group. So if you have, for example, like an umbrella company and you have multiple entities under that, you are limited to a total loan funding of $20 million. So a loan size for a second draw PPP loan, it's going to be the lesser of $2 million. So they did decrease it from the $10 million in the older CARES Act. So max is either $2 million or 2.5 times your average monthly payroll cost during that same covered period you can choose from. And then if you fall under code 72, this is technically mostly restaurants and hotels, you can actually receive up to 3.5 times your average monthly payroll figure. Businesses that are part of, again, that same kind of umbrella structure, your total loan fundings cannot be more than $4 million. So let's take an example here, since technically the calculation is the same for both borrower types. So let's just assume that we are one of the a business type that falls under the 2.5 times monthly calculation instead of 3.5. So your total payroll, and let's say you chose 2019 as your covered period, is 575,000. And then to get the average monthly, we obviously divide that by 12. And then we take that average monthly payroll cost and we multiply it by 2.5 months. And that gives us a total loan amount of about 120,000. So what do payroll costs include when you're looking at how to get that average number? So it's going to include a lot, again, most of the same guidelines as before. I do want to point out, and I bolded it here, is that the main difference, as I mentioned in a previous slide, is that they're now including group healthcare or group life. So compensation to your employees, they can't be employees that live outside of the United States. Cash tips or the equivalent, payment for vacation, parental, family, medical, or sick leave, allowance for separation or dismissal, that group healthcare or group life, payment of state and local taxes assessed on compensation of employees. And then if you are an independent contractor or sole proprietor, the wages, commissions, income, or net earnings from your self-employment or similar compensation. I do want to point out there are some interim final rules that the SBA has been releasing that are very specific to independent contractors or sole proprietors. So if you do fall into that category, I highly recommend going to the Treasury's website, and I'll have a link here at the end of my presentation so that you can go through and it will address, it's a Q&A structure. It will likely address any questions that you have. So payroll costs that are excluded that you cannot include in that calculation are, again, any employees whose principal residence is outside of the United States, compensation of an individual employee in excess of $100,000 on an annualized basis, as prorated for the period during which the payments are made or the obligation to make the payments is incurred. Federal employment taxes imposed or withheld during your covered period, qualified sick and family leave wages for which a credit is allowed under Section 701 of the FFCRA. So they kind of consider that double dipping. So one of the really cool guidelines that came out is that if you are a first draw PPP loan, you actually can apply for a loan increase or a reapplication under that eligibility guideline. So let's say that you received a PPP loan or you had a PPP loan approved on or before August 8th, 2020. This is going to apply to you. You have to submit your request on or before March 31st, just like every other PPP borrower, and it will be subject to whether there's still funds remaining. You cannot have received a forgiveness payment yet. So your lender can't have received forgiveness payment from the SBA in order to qualify. If you do request an increase, it can only be made by the lender of record, which is technically who funded your first PPP loan. So you're going to have to go back to that lender if you want to do this. And then here are the bullet points for who can request an increase or reapplication. So partnerships that received a PPP loan that did not include any compensation for their partners, seasonal employers whose loan calculation results in a higher loan amount based on the new period. So in the new act, they're actually now allowing that your average total monthly payroll payments can be any 12-week period selected beginning on February 15th, 2019 and ending in February 15th, 2020. So if your loan payment is, or if your loan calc is now higher, you can actually apply for that difference. Borrowers that return the full loan amount before December 27th, 2020, but SBA has not remitted a forgiveness payment, you can also now apply for a new first draw PPP loan. A borrower that returned or paid part of the loan, maybe you didn't need all of it, so you paid some of it back, you can actually request an increase equal to the difference between the amount retained and the amount approved. And then borrowers that did not accept the full loan amount may request an increase up to the amount originally approved. Increased amounts cannot exceed $10 million for individual borrowers, or if you're in a corporate group, $20 million. That's basically saying the same thing. And so, who can apply for a second draw PPP loan? Again, your business has to have been in operation on or before February 15th of last year. You have used or will have used the full amount of your first PPP loan before your second one disperses or funds. It doesn't have to be forgiven yet. So you just have to have spent it. You don't have to have applied or received forgiveness yet, though. And then 300 or fewer employees, again, that's per location. Only one second draw PPP loan per entity, so you can't double dip. You only get one this round as well. Can't be permanently closed or in a bankruptcy proceeding, just like first draw borrowers. And then this is really important. SBA actually just released this over the weekend. If you are applying for a second draw PPP loan, you have to have your first PPP loan's SBA loan number on hand because that is going to be required as part of the application. So your lender is not going to be able to move forward unless you have that SBA loan number from your first PPP loan. So if you don't know what that is, I highly recommend you trying to get in touch with that lender so that they can give it to you. So they added some additional guidelines in here for second draw borrowers. So your business has to show at least a 25% reduction in gross receipts in 2020. And you can verify this and calculate it by comparing quarterly gross receipts for one quarter in 2020 with that same quarter in 2019. So for example, let's say you have gross receipts of $50,000 in Q2 of 2019 and gross receipts of $30,000 in Q2 of 2020. You then experienced a revenue reduction of 40% between those two quarters, and so therefore you're eligible. If you were in operation all of 2019, you can also be deemed to have experienced this reduction if your business had a decrease in annual receipts of 25% or greater in 2020 compared to 2019. You just have to provide annual tax forms to verify that reduction. If you were not in operation all of 2019, there was an interim final rule released with specific guidance on this. And in a nutshell, what it says is that an applicant that is not in business during the first two quarters of 2019, but was in business in the last two quarters, so Q3, Q4 of 2019, can qualify if you can demonstrate a 25% reduction in gross receipts in any quarter in 2020 as compared to those last two quarters in 2019. If you were only in business during Q4 of 2019, you can qualify still if you experience a 25% reduction in any gross receipts in any quarter in 2020 as compared to Q4 of 2019. If you were not in operation in 2019, but you were by February 15th of 2020, you can show the reduction between Q1 of 2020 and Q2, Q3, or Q4 of 2020. So you can choose a subsequent quarter of last year. So what is the SBA considering as gross receipts? They just released some guidance on this, that it's basically all revenue in whatever form received or accrued based on your accounting method from whatever source, excluding any forgiveness amount paid in 2020, but including sales of products and services, interest and dividends, rents and royalties, fees or commissions, and then you reduce this by returns and allowances. So pretty standard accounting there, nothing really major. So what documentation can you plan on providing? You're likely going to be required revenue reduction support if you are getting that second draw PPP loan. So business financials and bank statements to verify that. Your payroll records, obviously, because you're going to have to confirm your payroll cost, and you want to show that your business was in operation and had employees February 15th of last year. And you're going to need business documents, likely to showing that your business is still in good standing. And again, this is going to help prove too by your articles that it was formed and in operation prior to that February 15th date. Personal information, they're going to want a valid ID, and then tax returns and statements. This can vary by lender. I've seen some people require this and some not, but I would definitely just have them on hand in case they are required. There's also some good faith certifications that are outlined in the application. So you're basically just kind of initialing next to each one stating that the information you're providing is true and accurate. And then when you do apply for loan forgiveness, you'll need to do that directly with your lender. So keep that in mind. Something that we recommended last time and have found it to be really helpful is that if you open a bank account specifically for your PPP funds, it just helps you keep track of all of your eligible payments, which just majorly simplifies your forgiveness application when that time comes. All right, so probably one of the most important questions is how do you apply? So first draw loans, we actually did end up partnering with a PPP expert this year called the Loan Source. They are experts in this. They did over 500 million in previous rounds. They've actually purchased existing banks' PPP portfolios, and so they are technically managing almost 5 billion in PPP loans. They dedicated their entire team to help with this, so they're not distracted with other funding products. They're specifically helping people with PPP. They started accepting applications over the weekend. So if you did already register, they should have already emailed you in regards to when and how you can apply. If you did register and haven't heard from them yet, just hang tight. But they are open and ready to accept registrations and apps. You don't have to be an existing customer there to apply. There's no minimum loan amount. So even if you're applying for $1,000, they've got you. So the link is right here, www.theloansource.com/partner/FranFund. This is also on our website, so if you just want to go to our website, that link is available there as well. You will simply go on and create an account. You will need your business's employer identification number, or if you are an independent contractor or sole proprietor, you can enter your social. The Loan Source will be communicating with you directly. So if you have any questions or you need to follow up on your progress, you'll need to reach out directly to the Loan Source. They do have a contact us on their landing page. So we definitely recommend reaching out to them. They'll be able to answer your specific questions. And then we highly recommend not applying to multiple lenders. This did cause some issues in previous rounds because essentially if you get assigned an SBA loan number with one bank, another bank cannot do it. So even if you want to cancel out with a previous bank you applied to, it's very time consuming and just throws a wrench into everything. If you're a second draw borrower, we do recommend that you go back to your first draw borrower just because they have all of your information. And it's easier to apply that way. But if for whatever reason you were unhappy with them, they didn't communicate with you well, you just had a bad experience, or maybe they're not even participating in this new round, please also feel free to apply at our landing page. It's for first and second draw borrowers, so you certainly can if you prefer to do that. All right, so that sums up PPP loans, and now I'm going to get into the Economic Injury Disaster Loans Program. Currently, if you've been to the SBA website, it's down right now. You can't apply yet. But SBA did release a notice that they are working on this. They've actually created some kind of new portal that's supposed to be extra efficient, so fingers crossed there. I looked this morning, it still wasn't up, but once it is, you have to apply directly to the SBA. There's no lender that you work with as a liaison. You just apply directly on the SBA's website. The application can be found there. It's really simple. It should only take you about 5 minutes to complete. Most of it's like check yes, no boxes. The deadline to extend is the end of the year. Pretty much the same terms still exist. The max loan amount you can get under the EIDL loan is $2 million, and you can essentially use it for any legitimate business purpose. 30-year term. There's a deferment period of 1 year, so you don't have to make payments for the first 12 months. Interest does still accrue, though, during that time. So if you prefer to make payments during that time, you certainly could. The rate is 3.75%, 2.75% for nonprofits. There's no prepayment penalties or fees. In the past, SBA did change it to where they were taking a basically blanket lien on your business assets. Since this loan is not forgiven and has to be paid back, I don't know if they're going to do that again, but I would assume that they are. But there is no personal collateral, so you're not having to pledge your home or do anything like that. All right, so then the idle advance, that was in the past when SBA would provide $1,000 per employee up to 10,000. It is completely forgiven, so you don't have to pay that back. The forgiven grant was actually reinstated in the Consolidated Appropriations Act of 2021. And it right now, the way that it's currently written is that it's only providing additional funding for entities located in a low income community. So I'm hoping that SBA will release guidelines that it's for anyone that's been affected. But we're having to wait on that since SBA hasn't released their specific guidance on it yet. But as it sits, entities with low income communities that received an idle advance under the CARES Act, so that already received one, are actually eligible to receive an amount equal to the difference of what the entity received under the CARES Act and 10,000. So they're giving a little bit extra of a cash cushion there, which is nice. If you did not secure grants because funding had run out in previous rounds, you're now eligible to apply. So again, right now it looks like it's only applicable to low income community businesses, but we'll see if that changes. The new act did clarify that you can receive both an EIDL and a PPP loan. I know that was confusing in the past, but it just cannot be for the same purpose. So if you are spending your PPP loan on payroll, you can't also use your EIDL loan on payroll. They need to be separate. So more to that to come. We're also updating our website with this information as well. So we'll update it as soon as SBA gives us what we need. SBA debt relief payments. This is where the SBA actually covered up to 6 months of your payments. I know that was very, very popular. So they did announce that they're extending that. We're still waiting on the SBA to come out with guidance on this. I've seen lots of different communications from other financial institutions or groups in our industry, and a lot of it's conflicting. Some of it I don't agree with. So we are waiting until that guidance comes out to ensure that we're providing accurate information. So again, this program will cover the principal, interest, and any associated fees on new and existing loans. You don't ever have to pay that back. Those payments are forgiven. SBA and Treasury are the ones covering it. There's nothing you have to do in order to get those payments. As soon as the SBA guidelines come out, starting on February 1st of this year is when this is supposed to be activated. Your lender will handle anything that's needed. As it currently sits, the act that was passed in December basically says that loans approved prior to March 27th will receive an additional 3 months of covered payment starting on February 1st, but they are capped at $9,000. So if you had a loan approved prior to the CARES Act being enacted in late March of last year, this applies to you. And then if you're in an underserved, if you're considered an underserved business, so you were hardest hit by the pandemic according to the SBA, and I have the codes here for the industries that includes, you'll receive an additional 5 months of payments. And then any new loans that are approved between February 1st of this year and September 30th will receive 6 months of loan payments capped at $9,000. However, in order to actually receive the payments, your loan has to be fully dispersed. So if you do have build out, for example, these wouldn't kick in until your build out was complete, and you'd receive the whole loan amount, and then the bank would, or the SBA would start taking full principal and interest payments for you. The SBA is considered approved, meaning that the SBA has issued your loan a loan number. So usually the bank will do this right before your loan closes. So it's not the same as when the bank approves you. It's something that they do right before your loan is funded in order to get you an assigned SBA loan number. So if you're already currently working with a bank and you don't know if you received an SBA loan number or not, I would go ahead and reach out to that lender and ask them. But technically it's part of the final stages of your loan funding. We are updating our website again, but if you do want to continuously check the SBA's website, they have a whole section dedicated to this. It still has all the old data, but as soon as their guidance comes out, I'm sure they'll update it same day. So what SBA incentives are out? There are two main ones. So the SBA is actually waiving the guarantee fee for all borrowers, which is really nice, for any loans approved between December 27th and of last year and September 30th of this year. The guarantee fee is typically 3 to 3.5% of the guaranteed portion of your loan amount. So it's technically the biggest fee associated with SBA. So that's a super nice incentive that they're getting rid of that for the time being. And then the SBA is also, they have increased their guarantee to 90%. So while that's not necessarily a huge incentive to borrowers, it's definitely an incentive for lenders. And we're hoping that that really encourages lenders to continue lending. And maybe it'll open up some additional opportunities. For example, maybe a bank stopped doing startup lending, or maybe they stopped lending to certain industries or something like that. Hopefully, this opens those doors back up, giving them some additional security from the SBA. I do want to point out that although this should incentivize lenders to lend more, continue lending, it doesn't change the standard operating procedures that lenders must abide by in order to get that SBA guarantee. So the same qualifications and eligibility standards should still apply whenever a lender is assessing you for loan approval. So here are some key resources. So our website, which we will continue to update as I've mentioned. This is our landing page. If you do want to go apply for a PPP loan using the loan source, here's our partnered site, SBA's website, and then this is where you will find all of the interim final rules and guidance released from SBA and the Treasury. So a key website if you do want to go in and read those yourself to get more answers specific to your unique situation. And then here's that IRS website again for the tax credit if you wanted to learn more information about that. But again, I also recommend asking your accountant. And then if you haven't already, we highly, highly recommend that you sign up for the Franchise Action Network. Anything that's in these acts that could jeopardize the way that franchises work. This is a great advocacy platform, so we always recommend that you go on there, see what initiatives are on the Franchise Action Network, and participate in whatever way you can. Yeah, so we plan on putting this recording on our website. So if you wanted to go back through any of the slides, that will be a recording on our website. And also our website is updated with all of this same information, so it lays it out for you. If you just go to our website, click the coronavirus link, it will give you all of this same information that I shared with you today. And that concludes it. If you do have any additional questions, you can go to our website and do the contact us. Those will go to me. So I will try to answer as many as I can if y'all have some additional questions. Thank you so much for your time today and hanging on while I go through all of this tedious PPP stuff. I hope this was helpful to you. We very, very, very much appreciate each and every one of you. So hopefully this helps, and I hope you all have a great rest of your day.